Hello everyone, and welcome to UNSW Economic Society's Week 9 Market Recap, covering the latest macro events in Australia and around the world. This week, we have a COVID update, a look at Australia-China trade, and more. To start, an update on the current state of COVID. On Tuesday, the New Zealand government announced details of a travel bubble with Australia. Jacinda Ardern said that quarantine-free travel will be allowed from the 19th of April. The travel bubble will be conditional on outbreaks within Australia and New Zealand, and that travel arrangements could be paused or suspended depending on the nature of the outbreak and extent of community transmission. Subsequently, and rather unsurprisingly, we're seeing stronger demand for travel, with an uptick in ticket sales for airlines as well as hotel bookings within New Zealand. As for vaccinations, the Morrison government advised this week that the AstraZeneca vaccine not to be given to Australians under 50, as a result of the marginal risk of blood clotting. Additionally, the government has also announced another 20 million doses of the Pfizer vaccine have been bought, but won't arrive until late 2021. Australia is now over 3 million vaccines behind its initial vaccine rollout scheme. Furthermore, this week, a study from PwC found that younger Australians are more hesitant to take the COVID-19 vaccine. The study, published this Wednesday, showed just 39% of Australians aged under 34 are willing to be vaccinated as soon as it's available to them. This is compared to 69% of people aged over 65, or 80% of high-income Australians willing to be vaccinated compared to the 62% in the lower income brackets. PwC said the disparity in hesitations highlights the need for tailored messaging of the vaccine. Now on to Australia-China trade. Following sanctions on barley, coal, copper, and other goods that have cut $20 billion a year from shipments to China, Australia has seen to have diverted much of its China-bound trade. Research from the Lowy Institute this week showed Australian exporters have managed to divert part or all of their exports to other countries. While Australian coal exports to China had dropped $6 billion by January 2021, coal shipments to the rest of the world were running $9.5 billion higher in annualized terms than before the ban. Exports of barley, copper, seafood, and timber to other markets have also risen sharply following China's ban on those goods. Goods which make up $25 billion in trade, or 1.3% of GDP. In other news, in an interview with Bloomberg, Australian Trade Minister Dan Tehan vowed to protect Australia's interests after China's ambassador threatened to respond in kind if Canberra joins sanctions against Chinese officials accused of human rights abuses. On Wednesday, China Ambassador Cheng expressed hope for relations to be put back on track, while again pinning the blame on Australia for damaging ties. In what was described as a propaganda demonstration, Cheng fronted Australian media on Wednesday to dismiss claims of human rights abuses in Xinjiang. Moving on, also of import this week, the RBA has frozen rates at 0.1% for another month. It has kept its targets for its 3-year government bond at the same 0.1% and is holding its quantitative easing and term funding facility on steady. Now on to a rapid-fire round. Minimum wage talks are in the news, with the Morrison government urging the Fair Work Commission to freeze a hike. Biden has proposed an international tax scheme to reduce avoidance of tax by multinational corporations. China continues to open coal plants, with 38.4 gigawatts open last year, which comprised 75% of the world total capacity. Australia forecast GDP for FY21 has risen to 8.7%, up from 7.45% in a previous survey. And finally, March ANZ job ads are up 7.4% month on month from 7.2% in February. Thanks for tuning in, and we'll catch you next week.